What's up guys, welcome back to the channel. In today's lesson, we'll be talking about the turtle soup strategy with a detailed entry pattern. The last time we talked about the turtle soup strategy, and if you've not watched that particular lesson, I will advise you watch the lesson before coming back to this. In today's lesson, I will give a detailed entry pattern which we can actually use to trade the turtle soup strategy. The last lesson will be linked in the description, so first watch that one to get clarified, then you can dive into this particular one for a better understanding and a detailed entry pattern which is best to trade the turtle soup pattern. Now, one thing I want to bring to your understanding is that as long as the market is open for trades, there will always be a turtle soup pattern. Price will always create this turtle soup pattern. And what is turtle soup? Turtle soup is simply false breakout. False breakout is simply where price moves below an old low to sweep liquidity, or reacting above an old high just to take liquidity. And what happens when price takes this liquidity? This liquidity is taken so price can actually move to the opposite direction. So this false breakout is just to put traders at the wrong side of the market, not just putting traders at the wrong side of the market, but actually seeking liquidity to move to the opposite direction. So this is the essence of the turtle soup strategy, and this is exactly what I will explain in today's lesson. Just like I said the last time, this strategy occurs every week in the financial market, and just like I mentioned right now, as long as the market is open, we will always see a turtle soup pattern, and this is exactly what we are seeing on the price chart right now. This is actually a trade I took with my VIP community, where we got an entry right here, and you see price reacted to the downside. Price presented about 1:7 risk to reward in this particular trade, but this is not actually what I want to talk about. What I'm actually talking about in today's lesson is the turtle soup pattern. And if you try to zoom in, you can clearly see that we have a turtle soup pattern right here. What can we actually see from here? You see price sweeps the liquidity at this particular low, because this is an old low. You see this is an old low. It's actually more like equal lows. What is happening at this particular area? You see price came back, sweeps the liquidity at this particular low, and you see the reversal to the upside. You see price sweeps the liquidity at this particular low. After it took the liquidity, you see how it's reversing to the upside. So this is simply a turtle soup pattern where price breakouts falsely, making sure that the liquidity at this lows we are taking, and you see how it reversed to the opposite direction. So this is what I'm basically going to teach you in today's lesson, how you can actually trade this turtle soup pattern. And another important thing is talking about the entry plan. So let's look at this particular chart we have. So from this particular chart, we can actually use this to identify the turtle soup strategy. And according to the rules from the last lesson, what I basically explained is that price has to firstly move above old highs or beneath old lows. So let's assume in this particular case, this is actually an old high, okay? This is an old high, possibly equal highs, or maybe just an old high, a single high. And what is known, liquidity rests above this particular high, okay? We have a lot of liquidity resting above this particular high, and what is the expectation? We're going to expect a false breakout at this particular high once price comes back to this particular high, and this is exactly what we're seeing at this particular area. You see price returns back to this particular area, sweeps the liquidity above this high. So when price moves above this particular high, what we're going to see in the financial market is that a lot of breakout traders is going to look to trade the continuation of this trend, okay? They're going to look to trade the continuation of the trend, but at this point what we see is that price sweeps the liquidity and we have the reversal to the downside. You see how price drops deeply to the downside, and what is the entry pattern we're going to look at? The entry pattern we're actually going to pay attention to is what we call change in state of delivery. And what does it look like? So at this particular point, what you can clearly see is that we have multiple bullish candles, we have the pullback, and you see this particular bullish candle swept the liquidity at this particular high. So you see this last up close candle, once it sweeps the liquidity above this high, what you're going to anticipate is a reversal to the downside. And at this point, you see now price starts to reverse to the downside. Where we're going to pay the most attention is at the particular candle that closes below this particular level, okay? Once we see a bearish candle closing below this candle, this is our change in state of delivery. You see this bullish candle right here automatically turns into an order block because price pushed to the downside and it closed below this candle, and this is where we identify this as change in state of delivery. How are we going to get an entry? Once you've marked your change in state of delivery, what you're going to anticipate is the retest of this level. So once price comes back to retest this particular level, you see how price comes retest this particular level, this is going to be your entry, and you can go ahead and project your targets. This is the simple strategy. You see this bullish candle right here is your order block. What you do is you mark the opening price of this order block. So now this is the particular candle. You see this bearish candle retested this particular bullish candle before the reversal to the downside. So this candle right here is your order block. Now once you mark it and you get your entry, make sure your stop loss is placed above this particular high, and then you can go ahead to project your targets. Another confluence that can actually make this a high probability one is you see price leaving an inefficiency right here. Now price comes back, retests the order block, rebalances the inefficiency, and you see the reversal to the downside. So this is simply the change in state of delivery. This is the best entry pattern to approach the turtle soup strategy. And this is exactly the same thing we've seen for this bearish example we have right here. Over here, we can clearly see that we have an old low at this area. Price came to the old low to sweep the liquidity at that particular low, and you see a lot of liquidity was actually resting at the low. Now price came to this particular low, swept the liquidity at these lows after we had this false breakout. Now breakout traders will be expecting a continuation to the downside. Now what we see at this particular area is we have this bearish candle. That is the last down close candle before we see momentum kicked into the market, and it's closed above this particular high. So you go ahead and mark this particular high. Okay, you go ahead and mark this particular high. You see this bearish candle, that's the last down close candle which this bullish candle closed above. This is your order block, and this is actually changing state of delivery. And what are we going to expect? We're going to expect that price is going to come back and retest this order block, and we're going to have a continuation to the upside. And this is exactly what you've seen on the price chart. You see how price comes back, retest the level. Now all you have to do, place your stop loss below the low of the candlestick, which is your order block. Then you can go ahead and project your targets. This is a very simple strategy which gives profitable risk to reward ratio, and it actually appears almost every day in the market. All you need is to train your eyes to see this particular pattern. Another important thing I mentioned last time we had this lesson is that this particular strategy has two different patterns. Firstly, we have the reversal pattern and we have the continuation pattern, and these are the patterns which I will actually show you once we move to the price chart. But another important thing I want you to notice for this entry is that at first, if you look at the first example we have right here, you see the first candle was not able to break below this bullish candle. It was actually the second candle which broke below the candle before we see price leaving this inefficiency, right? So it was actually the fourth candle that came back for the mitigation. But in this particular one, you see after the sweep of liquidity, you see the next candle engulfed this particular bearish candle, which made it an order block. Okay, so anyway price presents it, just don't get confused. All you have to understand is that once the next candle closes above the last candle, which is this, in this particular case, once this bullish candle closes above the last down close candle, it automatically turns into your order block, and you wait for the retest. Exactly same goes for this. It doesn't matter the number of candle that was printed. All we want to see is once price close below this bullish candle, it automatically turns into an order block, and this is our change in state of delivery. Now change in state of delivery is actually different from market structure shift. If you're actually looking at market structure shift, this was the low which you're actually going to identify as a market structure shift. Okay, this low right here is going to serve as a market structure shift if it was actually what we want to consider. But we're not looking at market structure shift in this case. We're looking at change in state of delivery. Another thing you have to understand is that market structure shift is actually stronger than change in state of delivery. But let's move to the price chart for a live example. So we're actually going to start from this particular setup which I've already shown you guys, and just like I said, someone made a bad comment about this particular setup which I won with my team. He was actually saying this is actually a basic setup, it's too basic, and he forgets that it's actually the basic thing and the simplest thing that makes money for you in the financial market. You don't have to complicate any strategy. One thing you have to understand about me is that I try to break strategies down to the simplest form and advise you to make money from it. Okay, and this is exactly what I'm doing for this turtle soup pattern. It's actually the simple things you say in the market that will make money for you. Okay, you don't have to overcomplicate things. It doesn't make sense to me. Now talking about the turtle soup strategy, so let's start from this particular one we're seeing right here, and you see this particular one is actually a reversal pattern because you see price was reversing to the downside from this order block. Okay, price pushed to the downside from this level right here, and you see this particular one is a reversal reversal pattern, which we are anticipating that price is going to continue to the upside. Now, what can we actually see from this particular setup? At first, you see we have these equal lows right here. These are relative equal lows, which we've seen right here. There is a lot of liquidity resting at this particular low. You can see that liquidity rests at these lows. Now, what price did right here is that it pushed to the downside, swept the liquidity, and you see the reversal to the upside immediately. You see how price swept the liquidity with this bearish candle. After the liquidity was swept, you see how price reacts to the upside. So all you have to do right now for your entry is trying to identify the change in state of delivery, and remember exactly how I said you should do it. Since this is a bullish example, you have to mark the last bearish candle. You see, this is the last bearish candle we have right here, and you see this particular second candle. You see the first bullish candle was not able to engulf the bearish candle. Now you see the second candle was able to engulf it, and if you try to extend, you see the next candle, which is the third one, came to retest this particular order block. So this is your change in state of delivery, and this is actually where you're going to get your entry and look to trade to the upside. And you see how price retested this particular level nicely, and we've seen that nice reaction to the upside. Okay, see how price retests the level, and you see the reaction to the upside. And this is a very simple strategy, and this particular price action is happening currently in the market. This is Monday the 3rd of June. If I'm not able to upload this lesson today being the 3rd, then no, it will be uploaded tomorrow being the 4th of June 2024. Okay, so this is it right here. It's a very simple strategy. So let me show you more examples. Now, this is the second example on my screen right here, and this particular one is for a continuation pattern. Okay, the first one I showed you was for a reversal pattern, and this one I'm showing right now is for a continuation pattern. What can we actually see? Price has been in an uptrend, pushing to the upside. You see we had a mitigation right here, a reaction to the upside. We had a pullback. After the pullback, price formed this equal low, a continuation to the upside. Now, as a trader, what's your expectation? Another reversal and another continuation to the upside. Now, what you can clearly see is that price left an equal lows right here. You see, at first price has swept this old low. You see price swept the old low, continued to the upside, and at this point price left equal lows right here. You see these lows were actually equal. This means that a lot of liquidity is resting beneath these lows. Liquidity is resting below this low. A lot of people are actually seeing this area as their support level. And what is the expectation? The expectation is that price is going to come, retest, and continue to the upside. And a lot of people who are expecting the retest and a continuation to the upside, I'm very sure that their stop losses has been placed below this level. Okay, you see we have their stop loss below this particular level. Now we equally have the breakout traders who are actually expecting that price is going to break out below this level and continue to the downside, and you see price did exactly what they were expecting. Price actually break out from this level, okay, reacting below this particular level. So all these things price was actually doing, all this price action was just to build a lot of liquidity at this particular area. And what you can clearly see is that price react to the downside, induce breakout traders into entering their positions, sweeping the liquidity of those people looking to trade this from this support level. And what we see now is that we have a reversal to the upside, and all you have to apply now is the entry pattern. Once you've seen price reversing to the upside with this bullish candle, this first bullish intention right here, all you have to do is to mark this bearish candle. That is this bearish candle, it's your order block, because you see this particular bullish candle right here was able to close above this bearish candle. Now this is your order block right here, and all you have to do is to extend. But first, you see we have the first retest right here. It came back for another retest, and this is your change in state of delivery, right? So this is it right here, and you see how price retested it, and you're seeing the reaction to the upside. If you actually wanted to get an entry, those change in state of delivery is your entry, your stop loss below this level, and you can actually go ahead and project your target. And all we can see is that price has presented about 1.5 freaks to reward in this particular trade, and you can actually go for more. Okay, you can actually go for more, but this is simply the strategy. I say this strategy presents itself in the financial market. Okay, it always presents itself in the financial market. Let me show you more example. And this particular one is another one we're seeing currently in the market. Okay, we're seeing this one currently, and this particular one is more like a continuation pattern, because from what you can clearly see from here, we see we have this relative equal lows right here, these lows right here, and I'm very sure that a lot of stop losses are placed underneath these lows. Okay, these stop losses are placed under these lows, and this is actually support and resistance traders which are seeing this area as their support level, and they have been looking to trade to the upside. So I'm very sure that they have a lot of stop loss beneath these lows. Now breakout traders are still expecting that price is going to break out and continue to the downside, but what we see at this particular area is that price reversed to the downside, sweeps the liquidity at this particular low. You see all the liquidity resting at these lows we are taking, and you see the reversal to the upside. You see that reversal to the upside. You see that bullish candle reversing to the upside. So once you see this first bullish intention, this bullish candle we have right here, all you have to do is to mark the bearish candle, which is going to serve as your change in state of delivery. Okay, so you have to mark this particular candle and wait for the retest, and you see how price came back to retest this level nicely after this bullish candle closed above this particular high, making it your order block. Now you see extending it, you see price comes back, retest this particular level, and you see price respected it, and you see that reaction to the upside. This change in state of delivery, your entry and stop loss below the zone, that's the wick of this candle, that's the significant area to place your stop loss. And you see how price reacted to the upside. This one presented about 1:2 risk to reward. Okay, if I try to extend to this particular high, you see how price presents about 1:2 risk to reward ratio on this particular trade. And this particular one, we have another good confirmation right here, because you see price left an inefficiency right here. This was a good confirmation. It aligns with our change in state of delivery, and you see how price reacts nicely and reacted to the upside. So I think I've been showing bullish example. Let's see at least one bearish example. Okay, so let's look at another pair, Euro JPY, the 30 minutes time frame. This is actually the current price action I'm seeing in the market. As you can see, this is the 3rd of June 2024. Okay, this is actually what is happening today in the market, and from what you can see, we have these old highs right here. You see these old highs, liquidity rest above these highs. As always, a lot of money resting above these particular highs, a lot of liquidity at this particular high, and you all know what liquidity means in the markets. Now this simply means that there is reason for the institutions to come sweep the liquidity above these particular highs, and from what you can see, price built small liquidity at this particular area. You see a lot of liquidity. We actually built more like accumulation before you see price sweeps the liquidity above this particular high. Now when this liquidity was swept, we're going to anticipate a reversal to the downside. And where are we going to get our entry? When we look to pay attention to change in state of delivery. If you try to look closely, where could serve as your change in state of delivery? Personally, I would like to pay attention to this particular bullish candle we have right here. I hope you can see this bullish candle. This bullish candle can actually serve as my change in state of delivery. So you see how price reacts to the downside after the sweep of liquidity. Price reacted to the downside with this bearish candle, and you see it closed below this particular bullish candle. Now price came back, retested the level, not just retesting the level, but came back to rebalance some inefficiencies, and you see how price reacted massively to the downside, and it's still dropping to the downside. So this is a very good strategy, but a lot of people might not actually look to pay attention to this bullish candle. They might start looking at this smaller one we have right here. It's still a good one because you see price retested it, but to be on the safer side and not to miss the entry, I would have looked to consider this particular one we have right here. And you see this is a very nice setup, and you see how price reacted nicely to the downside. And from our entry to where price is currently, this is about 82 pips, and having 82 pips trade is actually a crazy one. Okay, it's actually a crazy one. I think I should show one more example before I end this lesson. So this particular one is on Euro NZD. This is the 15 minutes time frame, and from all the examples I've been showing you, you see price does not print exactly the same price action. It doesn't print exactly the same thing, but instead it prints similar price actions. Okay, the price action price is printing in the market while presenting this turtle soup pattern is not exactly the same, but they all explains the same thing. Price is always presenting a false breakout which takes liquidity and move to the opposite direction. That is exactly what price has been doing. Okay, so this is it right here. In this particular one, you see we have this accumulation right here. Okay, this accumulation is just a build of liquidity. During this accumulation, we all are very sure that we have a lot of stop losses placed underneath this low. A lot of stop losses underneath this particular low, a lot of them. Now what we see price do is price comes back to sweep the liquidity at that particular low. You see that how price reacted nicely to the downside, making sure that the liquidity at this particular lows was swept. Then we see the reversal to the upside. Now if you actually want to get your entry using change in state of delivery, you all can actually see the bearish candle. Okay, all you have to do is mark the bearish candle and extend and wait for the retest, and from what you can actually see, price came back for retest. So this is actually the change in state of delivery once more, but in this particular case, price didn't actually came back immediately to retest. Okay, it took price some time before coming back to retest, not just coming back to retest but also coming to rebalance the inefficiencies we have right here, and this is another confluence. Okay, this is another confluence to this. So price came back, retested our order block nicely, and you see how it's reacting to the upside. So this is a very simple strategy, and I would have loved you to watch the first lesson on that, where I talked about some of the confluence that can actually help this strategy play out the more. So if you watch that particular lesson and watch this one with the entry pattern I've actually showed you, you can actually go back to the price chart and backtest. What I have to assure is that this presents in the market every day in the market. It presents itself every day in the market. All you have to do is to look for the pairs it presents itself and the time frames which is going to suit you. Okay, because it's not going to happen on all time frames. So I hope this makes sense to you, and I hope you look to backtest and apply this strategy. So thanks very much for watching this. I'm Solomon Wisdom, and here is Born to Trade. If you have interest in joining a free Telegram community, the link is in description. And if you're looking to enroll for our mentorship, we have an ongoing mentorship. If you look to enroll for that, all those links are in description, and you can look to join us today. So thanks very much once more, and thanks for watching this one.